Hey everybody, this is John and welcome to the free video. There's a couple of main things I'll be watching for quadruple witching. So now that we've got the Fed rate out of the way, which everybody was expecting, which you kind of get a rally into that and a sell the news kind of a situation. My big thing I'm looking at here is 2650. All right, and as some of you may know, is that with especially with quadruple witching, you kind of get these weird moves where you kind of get this underlying attraction to what I would just call areas of large open interest. Okay, and if we come down here and we look at the open interest on the SPX options, you'll notice that right here at the 2650 level, we've got 130,000 open contracts. And when you look at these other areas, there's really not a lot in comparison. Okay, we're at 2662. The expected move for the rest of the week is $14. That easily tees us up to 2650. So what I like here is you can actually do a fairly cheap iron fly where essentially you sell. We'll come over here and say iron condor 2650, 2650, and let's do a little on the wide side, give it some room, 2675 and 2625. So you got a 1670 credit. So in something like this, just like you're risking on a 10 lot 8,000 to make 16,000. So if you do it as a 1 lot, okay, you're risking 800 to make 1,600. And of course, you can make this more attractive from a risk-reward perspective. If you say, all right, well, you know what, I don't want to risk that much. Let's make this 10 points wide. And from there, say, okay, 880 on a $10 wide. So now you're risking $1,200 to make $8,800. Okay, so now you've lessened your probability of success because your window is narrower. But we've got this rare moment in time where we're seeing that high open interest. So I like this play. It's a low, and if you're doing a 1 lot, then it's 120 bucks to make 880, right? So I like that one quite a bit. I'll be looking to do that one tomorrow. And then the other thing I've been watching here as well, of course, is any reversion to the mean strategies. And in reversion to the mean strategies, you can do in anything from a stock like Baidu, which we'll look at here in a second, to even Bitcoin. Okay, and what we're seeing now is that the speculative phase of Bitcoin is wrapping up. We're going to see more speculation in terms of very specific reversion to the mean strategies. So what do I mean by that? Well, first let's take a look. Well, let's just take a look at that right now. All right, 2 quick things I want to show you. I've had a lot of questions about a class I'm doing on Saturday. What are the main things that we're focusing on? And there's really 2 main things. One is kind of a quick and easy tool to see when a powerful multi-squeeze move is setting up. So here's PRA trading at 81.50, and you can see we've got a 2-day, daily, 4-hour, 2-hour, and 60-minute squeeze setting up at this time. Okay. Now you can see here last night I showed the results of this, and you can see that it was up, through 81. $2.50 in a day and a half. Well, now see where it is today. And you can see we're at $87.24. So essentially in 3 days, maybe 4 days, we went from 81.50 up to, and we actually got higher than that, but let's call it $87. And this is the kind of move where you can buy, like say, an in-the-money call, here at $2. And you're selling it at 750. Or in this case, because when you do get multiple squeezes, you can do the out of the monies. In this case, the 82 call was 75 cents, and now that one is worth, it's is it right at $5? But but you can see there if you're looking at or even the 85 call, which was trading at 25 cents, is now $2.25. So I mean, the point of this is that there are these kind of rare moments in time when we get these crazy moves based on that, and then the question is, first of all, how do we spot them? So that's the tool, and I'm going to talk about that on Saturday. And the other thing that I think is critical is that, when you see a stock like this and you're having this fantastic uptrend, and this is a weekly chart, why all of a sudden does it have this, I mean, it just can't catch a break, and it just keeps falling and falling and falling, and why is that? And so this is what I call the algo level reversions to the means. What happens is when these stocks actually have these big gains, and they get to a point where they represent over 1% of a hedge fund's portfolio, and then by their charter, they've got to get rid of some of it. You know, it goes, you know, it represents 1.75% of the portfolio because it's done so well. The algos start prepping for this and you can tell that they're doing this by these signals for reversion back to the mean. And that's the kind of stuff that's happening. We're seeing that the actual indexes are quiet in this market. The S&P, in fact, has not fallen more than 3% since November of 2016. But individual stocks are falling all the time because that's where the corrections are happening, or is within individual stocks. And this happens on 3 main time frames. So on a daily chart, but it also will happen on the hourly chart, and the same concept applies, where you get a little too extended, reversion to the mean, a little bit extended, reversion to the mean, a little bit extended, reversion to the mean, and it happens all the way down to a 5-minute chart. Okay, so and depending on what you like to trade, like these reversion to the mean trades work great in crude oil. Okay, there's a lot, I mean, pretty much any market, but crude oil, if you like to trade crude oil futures, this stuff is amazing. So you can see right here, and it doesn't happen all the time, but when it does, algos, reversion to the mean, algos, reversion to the mean. Okay, it's some fantastic stuff. All right, so if you look at this, it's a little scrunched up, but it kind of explains exactly how this is going to work. So if you're interested in this class and these tools, go to simplertrading.com/ETF, and there's going to be 3 basic levels. Okay, the Pro is going to get you access to a pre-recorded class we did on ETFs, everything you ever needed to know about ETFs, so you can understand the sector rotation part of this class. For newbie options traders, you're going to have an options basic course, so don't feel bad if you're newer to options. But then we're going to talk about this multi-squeeze method. We call it the haystack method, finding the needle in the haystack, and then it does include a copy of that multi-squeeze indicator. If you remember, this is how we found that one trade on PRA, which was awesome. The Elite course covers all of this, plus the Top Hat trading strategy and Top Hat indicator. That's the one that the algos are doing, okay? Plus 3 days of live trading where we'll be doing both the algo strategy and the multiple squeeze strategy, okay? And then for those of you that are more advanced, we've got a master class that includes a power correlation strategy. There's some information on this if you scroll down, if you're interested in that. You can always upgrade to it later, but it's pretty awesome as well. This class is going to be awesome. These are the tools that I'm going to be using in 2018. These are being incorporated into my trading plan for 2018, which I'll also share with you during the class. It's going to be a lot of fun, and looking forward to working with you guys there. All right, have a good one.